Hello traders, Cousin Vinny coming to you from theclosingprint.com, Sunday the 22nd of June, 2025. In this edition of your weekend video newsletter, we'll discuss the U.S. military ending Iran's ambitions for nuclear weapons after the markets closed flat near support, with volatility and gamma showing a lack of concern about market turmoil in the short term. That leaves us with 4 bullish signals this week, 9 neutral and 7 bearish. S&P support is 5,900 and likely gets tested this week. With the S&P 500 closing flat along with other indices, we see the New York FANG components, 10 stocks, closing inside of a range at the low, just above the 21-day moving average, RSI, MACD, and stochastics fading. That said, the S&P 500 shows a potential bearish divergence, having achieved a nice 25% gain from the April 7th reversal lows, making a high the previous week just shy of all-time highs, 1.5%. Volume was above average, so that's something to be concerned about. Stochastics is oversold, and MACD is somewhat bearish and fading. So we're looking for the S&P 500 to give us a direction this week, likely testing 5,900 in the short term. As noted back in 2003, when the Iraq War, weapons of mass destruction, hit the news wires, it was a pretty short-lived drop, only 6 trading days, before recovering and taking back the 50, 9, and 21-day moving averages, moving back above the 200-day moving average just before the end of that conflict on May the 1st. Along with the New York FANG and the S&P 500, the Qs pretty much in a sideways range, not showing much concern going into the weekend. RSI drifting a bit lower. Volume was a bit higher, but not like we saw with the S&P 500. Again, it's only 100 stocks, but we are watching the Qs as well as we start this new week. Small caps actually perform the best, looking for some direction as yields move lower and junk bonds move higher. This too suggests that risk takers aren't that concerned about the markets in the short term, despite the fact that the U.S. military pounded Iraq's nuclear facilities over the weekend. So we'll have to see how Sunday night futures open up and then again on Monday morning. For now, junk bonds and high yield corporate have resumed their bullish trends. With the junk bonds above the 200-day, high-yield corporate continues to rally along its bullish 9, 21, and 50-day moving averages. As previously stated, yields did move lower with the 10-year dropping back below the 50-day moving average, remaining in a range pretty much where it was in February, trading near fair value, the 50-day moving average. Brent and West Texas crude all moving higher last week, gasoline increasing in price. I imagine over the concern that there could be some disruptions in the markets, considering Iraq's claims that they're going to close the Strait of Hormuz. That said, there doesn't seem to be a concern showing up in gold, traditionally a safety trade, still trending above the 50-day, but fairly priced, I would imagine, at the present time. All of this considered, bonds, currencies, commodities, we see copper in a sideways range. This is a forward-looking economic indicator for the U.S. with copper remaining in a range. So we have a neutral signal here, slightly bullish, because it is above its 9, 21, 50, and 200-day moving averages. Those are moving up and to the right. Finally, we have commodities popping, lots of concerns around the globe in the short term. If you're bullish equities, you want to see this move lower. This is one of the bearish indicators that we have in the short term. So keep in mind that bonds, currencies, and commodities giving us neutral to slightly bearish signals in the short term. That's telling us that we should consider that the S&P could test 5,900 this week. Sectors, for the most part, show strength, with most of the 12 S&P 500 sectors above their 21-day moving average. You can see semiconductors are above their 21-day, at resistance. Tech also above the 21-day, at resistance, and maybe a bit extended. Financials and industrials also look fairly strong. JP Morgan was breaking higher last week, so watch the banks. Those could be very interesting this week. Energy, of course, has been moving higher. And we did see discretionary, believe it or not, rising, which is bullish for equities when we see that. That leaves us with the XLY, XLP, consumer discretionary versus consumer staples indicator, still bullish and rising, though it is starting to taper off a little bit. Momentum is clearly turning. So this is a bullish tailwind for equities. It's one of the bullish indicators that we have for the week. As previously mentioned, small caps did perform a little bit better. We had small cap energy above its 21-day, moving higher. These sectors look a little bit extended as well, but had a fairly strong performance last week, especially technology, materials, energy, and financials. All in all, the sectors are suggesting that we could see a pause again this week, maybe a test of 5,900 on the S&P 500. The stocks below from the IBD 50 look like we could see some follow-through, many of them showing a lack of concern as traders push these to new highs. In addition, Cathie Wood's ARK-K is performing very well, showing a lack of concern as the ETF is finally making new highs again. With ARK Innovation top holdings listed below, Circle taking off last week, up over 275% since its IPO 2 weeks ago. Call skew is off the charts, so I'd be expecting to see a fade at some point or a base similar to what we're looking for on CoreWeave, which continued last week, breaking out on Tuesday, following through on Wednesday and Friday. We had a holiday on Thursday. Volume looks really good. Watching CoreWeave for a base or another retest of the 9 EMA. Very strong, showing institutions have been picking up shares, looking for CoreWeave to continue to move higher. Lots of stocks continue to show up on the Bollinger Band TTM squeeze scan, as we saw last week with JP Morgan. Breaking out of a squeeze, TTM triggering, look for a retest of all-time highs, volume increasing, MACD and stochastics rising. With the latter embedded, we've got RSI showing strength of trend is improving. 921 50-day are pointing up and to the right, showing the trend most likely continues from this cup and handle pattern. Looking for higher highs on JP Morgan into the second half. American Healthcare REIT, another stock on the Bollinger Band scan, RSI rising, Bollinger Band's tight, looking for a breakout, volume starting to pick up, showing institutions are picking up shares. Franklin Resources, another stock on the Bollinger Band scan, RSI rising, price grinding higher, TTM triggering, volume increasing, showing institutions are active, MACD's charting to cross back up, and stochastics is embedded. Coinbase also on the scan. Pretty obvious breakout last week. We do have some resistance overhead, so if we flag or base first, that'd be a great point of entry. Looking for Bitcoin to continue to move higher. If we do see a breakout above recent highs, this could go. It's a cup and handle pattern, so use the depth of the cup as your measured move. Approximately 150 points. There again, it all depends on how the markets start off early this week. Many of the casino stocks are looking better. Watch Boyd Gaming, squeezing, looking like it's going to break out this week. Volume picking up, MACD, stochastics, and RSI all showing strength of trend. Wynn Resorts holding above the 200-day moving average, Bollinger Band still tightening. One of the names that we watch when casinos start to move, in addition to Las Vegas Sands. Watch the squeeze here, most likely breaks to the upside at some point in the near future. MGM testing the 200-day moving average, RSI kind of flat. Robinhood continues its trend. We're looking for this one to get to $100 per share sometime in the next 6 to 8 months. Well on its way, continues to break higher with aspirations of being added to the S&P 500. MACD is sort of flat, but volume did pick up on Wednesday and Friday last week. RSI is embedded, showing muscle, looking for continuation in the trend with Robinhood. Hims and Hers, another candidate from the Bollinger Band scan, picked up by the room during the week. Looking for a follow-through this week, a break above 67 and eventually above 73. RSI is showing strength of trend. Notice what happened last time it trended and muscle started to form. Both of these times the stock ripped to the upside, so we're looking for a breakout. Cup and handle pattern, use the depth of the cup for your measure move. Presently about 50 points. So $100 stock seems very possible with Hims and Hers. Rocket Labs also caught a lot of press last week. Looking for a follow-through. Bollinger Band's tight. Looks like we could test the upper bounds of this pattern in the short term. RSI is rising, showing strength of trend is improving as volume increases. MACD and stochastics turn. Probably one of the better setups this week. Looking for a continuation in the short term as well. TSSI trending. Dell also a stock that we started a new position in. Bollinger Bands again. A bounce off the 200-day, 921.50, all turned up and to the right. 200-day is somewhat flat, but price action is testing the highs. Most likely will continue. Data center related stocks continue to show interest. Institutions picking up shares as Supermicro started to move late last week into Friday's close. So watch for Supermicro, TSSI, Dell, and NVIDIA. Looking for strength this week, provided the markets don't pull back and test 5,900 in the short term. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for Sunday, the 22nd of June, 2025. Make sure you check these stocks that are listed below, as we'll look for these to follow through this week. I'll send out a watch list later tonight around 12 midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check your inbox for that. Otherwise, enjoy the rest of your weekend. Take care, and we'll see you in the morning. Ciao.